everyone wants to invest. Today, I brought a few representatives. Today, we're going to open with Mitchell Kim. He's based in New York City. He's covered the technology sector for a long time in South Side, especially in Morgan Stanley and KeyBank, where he was the head of the sector. He knows a lot about these companies, and there's somebody I know a lot. She's an investor in emerging markets, Maria Negrete. She is a manager of Artisan Capital, New York City. She's also invested in technology. Both are going to give their overview on how they see the technology sector, both in the United States and China. And then we're going to have a manager, a Brazilian manager, Miles Captain with Bruno Zongale. He's going to be explaining where he's investing in technology and where we can put this to the access of investors in Brazil.
To Mitchell. Thanks again. Welcome, Mitchell. Over to you.
Okay, great. Thank you, Roberto. Yeah, as Roberto explained, I've been looking at the global tech sector for the last 20 years, and I also was head of research looking at the China of Hong Kong and China. So I do look at from a regional perspective, broader industries as well. As for the tech sector, I remain still very positive on the tech sector. Of course, it's hard to not like tech sector when the tech sector has outperformed. If you look at the U.S. as well as you look at Asia, specifically China, in both of those markets, tech sector has really outperformed the broader index 10 out of the last 14 years. So if you look at MSCI China Tech 100 index, it has outperformed in the last 3 years, 18% per year for the last 3 years. And despite the fact that it's not cheap, right? I mean, it's a forward PE of 40 times versus 16 times for the broader MSCI China forward PE. And same thing with MSCI US Infotech outperformed 13% per year for the last 3 years. And its forward PE is 28 times versus 22 times for the broader market. But aside from, but of course, that investors love tech when, especially at the right time, appropriate time, because tech gives you super growth, and growth is very attractive, right? And but for me, take a step back, and if I think about it, tech is just more than just growth, right? Because I think going forward, we're at a pivotal point where I think technology will be embedded in just about every business. So if we see a business that's not embracing technology, I think those are companies that will stay behind competition. So I think I think if you look at medicine's going to become telemedicine, logistics, transportation, retail, and food industry. They are all going to be transformed by technology. And it's even more evident, especially with the pandemic, and we have gone through that in the last 18 months. And I think that's really become a catalyst, and I think we will see a tremendous acceleration of transformation in various industries. So, but within the tech sector, however, what do I like? Right now, just looking at more of the I'm going to just divide it into US and Asia, specifically more like China. Right now, I do favor US techs over Asian techs. And then my prime reason is that I am more concerned about the regulatory interventions of the Chinese regulators. That is not to say that US big techs are going to be under scrutiny by the U.S. regulators, specifically antitrust regulators. They will do that because we've seen, of course, Google's under investigation. In fact, France is penalizing Google $590 million, and you got Facebook with the whole antitrust issues. So it's not that U.S. is absent of regulatory risks, but I think in the U.S. it's more I think it's much more transparent and it is legalistic. Whereas I think in China and elsewhere in Asia, even including Korea, it's much more opaque. It's not transparent. And in fact, the companies that have been under investigation, they have to kind of thank the regulator for investigating them. So that is a very different approach. So right now, if you look at some of the main names, I look at obviously all of the main U.S. tech names, including Facebook, Google, Microsoft, and such. But if you look at, especially given in the last 6 months or so, U.S. techs have outperformed its Chinese counterparts, including Tencent, Alibaba, and Pinduoduo and whatnot. And the primary reason is that it is because of regulatory risk. I do think that if you look at over the next longer term, like next 3 years, I think Chinese tech will have better growth in the long term, like 3-year growth. But I think in the near term, the next 12 months to 18 months, I think U.S. tech will outperform the Chinese techs. And lastly, what I would touch on is that my approach really is when I look at tech stocks, and I look at other sectors as well, and specifically for China, but for tech stocks, I look at thematics. And then beyond that, I look at growth opportunities. And I also look at operating metrics and margins. And then I look at valuations. So those are kind of in that order. Currently, the thematics I like are the 5G and AI, artificial intelligence themes. And I do think that we have a big shortage in semiconductor chips. I think those are hardware techs that I like. I also like e-commerce. I think Amazon, I think Alibaba are very it still have much more upside, and those are some of my current themes that I like. I also like from the AI side. I like NVIDIA. Some of the one Chinese name that I do like is Cambricon Tech, which is only listed in Shanghai. And I also like, on the chip side, I also like ASML, Samsung, and TSMC to be short. So I'll just stop here and share the floor with others.
Okay, thanks, Mitchell. That was great. Maria.
Great, thank you, Roberto. And I think I'd like to kind of continue where Mitchell started. My job is really more bottom up. So all our views, all our sort of vision of the technology comes from a very bottom up point of view. So when we look at tech, especially tech in Asia, you can sort of look at the opportunities if you were to simplify hardware and software, right? They are very interconnected in a way. I think the software, I would throw internet in that, and the hardware, I would throw semiconductors in that. And what we have seen over the years is sort of they're interconnected in this sort of ascending way. When there is a CapEx cycle that is required, it's a lot of investments that happen in hardware to allow sort of the software, to allow the higher processing capacity. Things like 5G, for example, came ahead to allow something like a lot of the applications and processing for autonomous vehicles. And this is sort of the cycle in which we are, but at different moments in time, the opportunity lies in one or the other side, the balance of power, if you were to put it that way. And I think when I look at what Mitchell talked about, the issues for regulation that are really very grave in China, and these are, even if we didn't have sort of the regulator really barking on these companies, you have markets that are very penetrated. And when we look at the opportunity on e-commerce, China is advanced to the level that is not a surprise that we have sort of these tensions with the regulators. So that opportunity exists, and I don't disagree that there are opportunities there, but I like to look at the other part and where is hardware in relationship with that software opportunity. And there we are finding from, again, this bottom-up approach, great degree of opportunity. And I think if we look at hardware in Asia and semiconductors as an example of that, they do control the entire supply chain. And I think this supply chain, except for, I guess, semiconductor equipment manufacturer that is still in the US hands, every other part of that. And that is something that creates a competitive advantage that is very hard to replicate. This is not a business that if you just throw more capital, you get in there. I mean, China, for example, has been throwing all the capital to try to catch up. But I think this is something that learning curves are slower, the technology moves very fast. And that creates real true barriers to entry, true opportunities. And as we look at investors, we are long-term investors. So I guess we don't expect to get extra points to try to predict how is the Chinese regulator feeling tomorrow. You don't need to get into that game. I guess as investors, we don't get extra points for that difficulty. We can look for industries that are simpler and in a way more predictable in the capacity to sustain earnings and to generate earnings over time. And I think, well, these industries, historically, the hardware, the semiconductors has been fairly unattractive, especially if you compare to what investors in the US reward. In the US, we like efficient capital allocation, we like asset-light industries. This industry is the opposite of that. I mean, it's the most capital-intensive industry you can think of. The more, I mean, in terms of asset-heavy and like commitment to long-term capital is maximum in this industry. So those are industries that is what allow the existence of a company like TSMC. Because there is in a business that is almost so unattractive, I mean, they were able to consolidate it and lead in technology to a point that is really very hard for others to catch up. So I think I use TSMC because perhaps it's the best exponent of that, but in many areas of hardware, you have those examples. And I think the other advantage that is very hard to replicate is these clusters, right? These clusters of suppliers that you can find there that are very hard to replicate. But some of you listening to me will say, oh, what about the geopolitics? Yes, enter geopolitics in this. And what we're going to see going forward is a great degree of redundancy in the supply chain, because a lot of this hardware was ideal for globalization, right? These are very small things that need a lot of capital. It makes sense of one person doing it and distributing it over the world. With the tensions between the US and China, this is going to be disrupted somehow. But I guess in the sense, the balance of powers have moved so in the side of companies that have this technology capability that these companies are going to dictate the terms a lot more. They're not going to be the takers that were before. Before, all the power was in Apple, in the design houses, and these companies will have to do all the investments and like at whatever price. I think that balance of power has shifted and created really a more stable profitability, a more better terms for these companies in a long-term way. And I think this is not, as I said earlier, about throwing capital. I mean, China can climb any learning curve, and we have seen in every part of technology, right? LED panels, they took them 10 years, but they did it. In semiconductors, in leading edge semiconductors, they haven't been able to do it because it moves very fast. TSMC is doing, I know, it's in 5 nano, and the best Smith can do is, I don't know, still in the teens, 20. That creates sort of this multi-year gap that allow these companies to have a competitive advantage that they can replicate. And I mean, these are companies that valuation-wise in no way are similar or are as rich as like the counterparts on what it is, the more attractive, perhaps internet side, but they are what allows the whole internet to take place. So they are at the center of the future of tech. And I think now geopolitics have entered the space, and then people say semis have become the oil of, but I think these companies sustain a tremendous competitive advantage. And I use the example of TSMC and semiconductors, but this is true of other areas. Mitchell alluded to artificial intelligence. One of my favorite stocks in the portfolio is a robotics company in China, Eston Automation. Again, a beneficiary of this tension between the US and China, given that, I mean, this is companies that are upgrading the technology, being able to access the domestic market in a more sort of dedicated or exclusive way, and that creates a lot of opportunity. So I believe that hardware versus software in these general terms is something where the balance of power has shifted, and to us as investors, long-term investors, there are opportunities that are more quantifiable and less about betting how Xi Jinping is feeling today about this or that, and if he hates Alibaba or not. So not to take anything away from Baba, excellent company, but I think this is sort of a bit of what we're looking from the bottom up.
Oh, that's great, Maria. And now I'd like to turn to Bruno and tell us a bit more, how he's investing in Brazil and what are his main theses and preferences.
All right. Thanks, Roberto. Well, we've been investing in, I've been investing in tech for about 10 years now. And we finally got this product out for the public, the fund that we're putting to the public here, which is good because, as you said, these are the companies that everyone wants to invest. And in Brazil, was kind of difficult to have access to these kind of companies. Now you have, but at the same time, you don't have time to do all the study and all and everything. So we're really happy about that. So talking about this balance between US and China, well, as Mitchell said, I'm more enthusiastic about US companies today than Chinese companies. I agree a lot with Maria, especially about TSMC, which has become a very important part of the world geopolitical puzzle. We see that China has interest in taking over the island. We don't know when it's going to happen. But we know they're going to try it sometime, and that's why we're going to a redundant world, and we're going to have factories. We already have factories being built in America. TSMC is building factories in Arizona, and we're going to have this problem being arranged like in this way. And talking about especially these two different markets, I think that China is definitely the place where has the greatest potential of opportunity. We have only around 50 or 55 internet penetration in the country, which is by far the biggest country in the world. At the same time, we can see that the Chinese company bets, especially, they are in a 12-month low. I don't know after today how it ended, but and we see in the other part in US, FANGs at all-time high. So we have probably the biggest gap since 2018 between these two indexes. So what happens? Why do we have this kind of distinction now? Well, mostly because of what Mitchell said. This regulatory environment in China, it's kind of showing us that the country or the government, they don't want tech billionaires to rule the country. I mean, they're sending a message, in my opinion, and this is the first thing. The other ones is we've seen numerous kinds of interventions, different interventions. So since they postponed the end IPO on November 2nd, I think we've mapped around 20 or 23. Between 20 and 25 government interventions in the Chinese market. So when we see that,
quando
the investment part, you definitely start to get worried about how this is going to end. And so what I mean is, besides having a great potential in China, the environment is not that friendly. When we see the regulation, how regulation is going in the US, we see that, of course, something is going to happen in the same way, but you have society participating in the discussion. You see the major CEOs, they are called in Congress to explain themselves, so they have the right to give their opinions on how they're addressing the problem or how they're not addressing the problem. And but when we see in China, you just wake up and you have this surprise news. So I mean, this throws the investor away. So we've seen this happen in Alibaba. Now we've seen in also in Tencent and Didi. It was the last one. I mean, after less than 1 week after the IPO, so the government comes with this very tough regulatory thing on cybersecurity and all of that, something about the data they were collecting from their users. And then again, the investor gets hurt. It gets hurt really bad. So when I think China right now is in a point of inflection. So China has grown a lot, especially in the last 20 years. But they've grown. They changed a little bit the way they work. So from this communist totalitarian country, they kind of open up a little bit, or some part of the country, and they put this capitalist model to work, and they did a great job on that. But they did this by being followers. I mean, the pace of innovation in China wasn't that great. But they kind of, when you see like Chinese companies, the major ones, they started by copying something that did work out in other places of the world, especially in the States. So now I think China is in this inflection point because they've grown and they're too big now. So they're too big to be followers. So they have to decide if they want to encourage innovation and if they want to lead, or if they're going to be forever followers. So when I see all this happening in China, in my point of view, I see the government making a mistake. As Jack Ma said the day before the thing that happened with Ant, he said, I wrote it down so I won't forget, there's no innovation without risk. So that's what the government in China is doing. They don't want to risk all the control they have over society and over economy and everything. And but then again, when you do stuff like that, you make innovation less possible. So when you see the CEO of Pinduoduo getting out of the company only 5 years after he founded it, and he's going to do something else. When you see Jack Ma stepping down, and you don't see him anymore. I mean, he was painting. He's doing painting as a hobby. The last time I heard about him, and I see when I think about that, and I think, what if I was this technology entrepreneur in China? Would I like for to succeed really bad and to be in the front line like these guys? I don't know. Probably not. So I think there's this inflection point, very important inflection point, that China needs to decide its fate right now. And so just to end my part here, talking about what we like. So of course, we think some of the Chinese players are very cheap, like Alibaba, for an example, very cheap. I really like to be an investor, but I'm not today because I don't know what's going to happen there. So besides being really enthusiastic of all these Chinese companies, which, by the way, they have been innovating the last years. So you see there is a great potential. You see what they did with TikTok. You see, for an example, Alibaba, they were the first to mix financial services with e-commerce. And now we see Meli, Mercado Libre here doing the same. And so they have the potential. They just have to decide what they're going to do with their fate. So we really like, especially the American environment. We like players like everything that works with AI. We think companies with great AI software who can collect good data and analyze and get really good decisions on it. This is going to be a very important competitive advantage in the future. And we also, I think, the thing we like the most today is the cybersecurity environment. So I think we're going to a world where we have everything integrated. We're going to a world with IoT. You're going to have your electronics at home all integrated. You're going to have military systems. You're going to have hospitals. You're going to have a fleet of autonomous cars running in big cities. So I think cybersecurity is going to become more and more the most important thing in the mind of entrepreneurs, of investors, and it's going to be the world's biggest problem in a few years, faster than we think. So I think this is it's kind of below the line. I mean, we have good companies like CrowdStrike, like Cloudflare, new players like SentinelOne, but it's still, they're small companies. We have a $6 trillion problem today, which is a cybersecurity problem, and we invest really low amounts of money on that. So I think this is for us is our biggest call for the next years. So, well, I think I've gone through almost all of it. So go back to you, Roberto.
That's great, Bruno. Very good presentation. And I have a question now, and I would like to ask the three of you to answer. Actually, I have two, but let's go with the first one. So Mitchell said that one of the things he likes the most is 5G, so we all know that geopolitically, I mean, of course, it's a geopolitical issue. One of the United States' main priority, if not the number one, is to prevent other countries from using the 5G technology. So that's of course, Europe is where a lot of these fights are going to be decided, so how how does that affect your investing universe? Do you think there are companies other than the usual suspects like Ericsson or Nokia that could be winners if the US really goes ahead with this? And after all, do you think they're going to be successful in preventing Huawei to be used, especially in the bigger markets and especially in Europe? So let me start with Mitchell, Maria, and then Bruno.
Yeah, that's an important question. I do think that U.S.'s stance definitely has negatively impacted Huawei, and to a certain degree ZTE as well. And if U.S. didn't take that stance, I think Huawei and ZTE would have had a much greater market share in 5G. But I think it is where it is. I think U.S. will do what it can to protect this intellectual property, and also that they're also concerned about privacy issues as well. So those are two elements that U.S. is very concerned about. Now, in terms of, I think it does help Ericsson's and Nokia, but of course Huawei wasn't really listed, so it from an investment perspective, it didn't take a big hit per se for the investment community. But and ZTE was number 2, so ZTE was well behind. So from that perspective, it didn't make a big impact, but from a overall industry market share perspective, I think definitely US's strong stance did impact the progress and the growth of Huawei. And I think there will be an ongoing fight, and I think that because of that, I think we will also see China trying to accelerate its investments into key technologies, as well as I think what Maria mentioned before about investing in the semiconductor chips, as well as other PCBs and whatnot. So I think but that's not an area where you could just catch up by throwing money at it. I think China is still some 3 to 4 years behind, even on the chips as well. So, but if you look at it in the long term, China will get there, and so But in the short term, I think China, I think China is probably at the margin loser in this fight with the U.S.
That's great, Maria.
Yes, I think complementing a bit what Mitchell talks about, I think that this fight taking on China, the US can do it, can afford to do it in a way. And you have seen countries like Australia that have gone all the way, right? Like we don't want the spine, and Huawei being sort of the example of this conflict. Some other countries cannot afford to take on China. So in terms of how will the world be split, that is going to depend on what is your capacity. Australia can, and they already lost the wine business. They haven't lost the iron ore business because China needs them too much, but that will be in the mix at some point. Other countries cannot afford that. So when we talked earlier about redundancy, yes, there will be some degree of redundancy. Say, oh, you cannot buy from here, you have to buy from here, you have to create a new capacity, additional capacity at a massive investment, which might be stimulative to some industries. So there will certainly be winners on that, on this part, but it also will be at a higher cost to the ultimate consumer. So when we want, 5G, matters not for telecom. 5G matters for things like autonomous vehicles. I mean, a car that is in the road in an autonomous needs the processing capacity, the communication instantly to levels that without 5G, that is not possible. So I think these sort of needs of this technology are crucial. And that is really where the battle is at. Who's going to control these leading technologies? And the US and China know it very well. But in terms of who are the winners and the losers, it's going to be who can afford to confront and who cannot, and who can afford to pay the extra price and extra cost of essentially deglobalizing these industries, which is, to me here, seems very irrational, very wasteful, but it's the reality of the world where we are. And I think that is almost inevitable at this point.
No, that's great, Maria. And finally, Bruno.
Yeah, I think when we talk about 5G, we have to imagine 5G as this big highway, which is larger than the highways we used to have, with a greater speed limit. So that's why the US and West countries are so worried about when you have Chinese companies taking care of the technology on this highways. What happens is they can steal data. They can copy data and private data and secret data and all this with a very high speed, and with also with like big chunks of data, because this highway is really bigger than the one we used to have. So the world is changing now because on 4G is one thing. On 5G, the problem gets a lot bigger. And as Maria said, we've seen China going mainly on Middle East countries, African countries, Latin American countries, because these guys cannot afford to have to pay more to have, for an example, Ericsson or I forgot the other one you mentioned, Roberto.
Nokia.
Nokia, yes, of course. And so they cannot afford this. And these countries, they depend on China a lot as a consumer and as a supplier. So they cannot afford to for the price, and they cannot afford the geopolitical conflict they would have. For an example, we saw in Brazil what happened with the vaccine. When we started to talk about taking Huawei out and maybe getting Ericsson or Nokia in, and automatically we had a problem with the supply, with the vaccine stuff, with the IFAs of the vaccines. So at the same time, Brazil just stopped this discussion, and we were going with Huawei, which has, of course, cheaper products. But then again, it's no secret to anyone that China spies on the world. Probably the US does too, and Russia too. But from this point of view that we're talking here, there's obviously a move of China to get more control of these countries that cannot afford to go with the Western way. So I think that's pretty much it.
Oh, that's excellent, Bruno. And the other question is also, I mean, a lot of people don't realize, how much, tech is intertwined with geopolitics, and people don't appreciate the history of Silicon Valley and how much the U.S. military complex had to do with that. But I have another question, which is, I mean, with semiconductors and now. With not just the shortages, and that's because of the pandemic, but also the geopolitical situation in Taiwan. So even Europe, which is also for other reasons behind the tech race, they are talking about creating their own chip industry. So let's again do Mitchell, Maria, and Bruno. So do you see any investing opportunities from this attempt to develop the chip industry, the semiconductor industry, outside Taiwan? Can that really happen? And who would be the winners? Even if can be second-degree winners, like suppliers to that. Is there a way to play that trend?
I would say not in China. If I can jump in, I think China has poured a lot of money into this, and I agree they will get there. But at this point, you have valuations on these stocks that are extravagant. Why? Because the government is determined to have that industry, and they have poured enormous. So these are companies that have still very unstable yields. They are very struggling. It takes a long time to get there. But the valuations are in the 100 times plus, because this is an industry that is a focus industry. And so I don't think that, at least from our perspective, to invest is not the approach it will take. I mean, we know that it's a focus. We know the government will finance and pour capital into them, but I don't think they will get there. But in the terms of semiconductors, I mean, it's not only about TSMC. There are other companies. There are different types of semiconductors that are more niche players. Are there any in Europe? I'm not familiar. Frankly, I don't cover sort of the developed European market, but there would be, again, in areas and, emerging areas of spots of opportunity. But I think the whole idea of SMIC versus TSMC or China semiconductors at this point, I don't see the opportunity there. I think the valuation is extravagant, and the gap is way too big at this point.
Okay, Bruno.
Yeah, I agree with Maria, especially when you see SMIC, the Chinese biggest player. I mean, they probably have all the blueprints from all the factories in Taiwan. They have China has planes flying over the island every day. They have all the blueprints. They know everything. They have the plans. They have, and they cannot do the same. As the CEO of TSM said once, he says, what I do is an art. I mean, you can copy, you can have the recipe, but you're not going to make it the same way as I do. So I'm for the chips with low lithography, which are the chips with, below 10 nanometers. I don't think that we're going to have new players coming up. I really don't. I think TSM and Samsung are going to still be the main players. And we have now a move on Intel, looking forward, because Intel got dazed with their x85, 86 architecture, and they kind of forgot to look to the future for a few years, and now they're 10 years behind. So they were the ones who ruled the world in semiconductors, and they are now like really, really far behind. So maybe Intel will have a comeback. If I've seen they're going to they're going deep into this technology. They really wanted to produce 3 nanometers, but I don't think it's going to be an easy way. And when you see TSMC, they did a great job, because they pulled all the big players together with them, So you don't have AMD, for an example, producing their own chips anymore. They do with TSMC. So maybe we'll have in Europe and America other companies producing the high lithography chips, which are the more simple ones. There's the one that you have in your refrigerator or in the air conditioning in your car, that don't do many things. But these chips, there are really high technology that we need to have a high efficiency. We're probably going to have them on IoT things that we can even imagine. I mean, I really don't see other players coming up like on a flourish environment, like if the I mean, it doesn't matter. The governments want to spend money. They in the US, the best player is going to be TSMC, and in Europe, probably the same. So that's what I believe.
Yeah, maybe I'll throw in a few other names. Of course, when we talk about the chips, I mean, there are a lot of technologies that we could also look at related to 5G, related to next generation technology. I mean, I think Qualcomm has, already performed very well, and that's one of the companies that I highlighted in my 5G report last year. And Marvel, Analog Devices, Teradyne, those are some names that will continue to be a player in technology. I also, I started out by mentioning AI, NVIDIA graphic control. I think that NVIDIA is a player to be reckoned with. For one Chinese name that's Shanghai listed in Asia, Cambricon Tech, they do AI-based chip, but as Maria and Bruno said, they are really still well behind it. And that stock per se, I mean, it's actually down 50% from a year ago. So they have a lot to prove, but I do think that AI-based chips and software companies have a potential in the future, in the longer term future. On the chip side, I do think that ASML is very, very interesting company because they have the technology that other chip makers need to use. But of course, I think at Samsung, AMD, all these companies will be in there as well as Intel. So those are some of the companies that I look at it from a thematic perspective. They've all gone up a lot, but I do think if you look at where not just about 5G, but you got to look at 5G is not just person-to-person communication. It's an enabler. It's the Internet of Things. It's an industrial application. So everything that every business that we see will become or will be enabled by IoT. It will be enabled by 5G. So I think the demand for chips, I think from a services perspective, I think that will only accelerate. So, I think Maria mentioned before, autonomous driving. I mean, all those things need 5G. All those things need chips, and so I do think that demand for technologies and hardware, PCB boards, those are going to be continue to accelerate. So I do think the future remains bright for techs. But as for China versus, I mean, when it comes to technology, I think still China needs the technology that the U.S. and other Western countries have.
Okay, no, that's great, and maybe one more question, and I think we can again go around, starting with Bruno this time, and then Maria, and then Mitchell. Is Mitchell briefly touched on this, but what's really the agenda of the Chinese government? Is I mean, of course, it's all about control, but I mean, do they want to prevent these people, these tech billionaires from having power? Is it an issue of the U.S. listings and how much information they want to be linked to the U.S.? What's really their agenda with these companies and with the regulatory push? And finally, specifically to Ant Financial, and giving the benefit to the Chinese government, were they doing regulatory arbitrage in the sense that, okay, they were doing everything that a bank does, but not being regulated as a bank? So let's go with Bruno first.
Yeah. Well, first of all, great question. It's really hard to answer that because knowing what the CCP agenda is, it's basically impossible. But as we've been seeing, I think there's a lot going on there. So, well, first of all, there's this part of the government, wanting to send the message, wanting to maintain control of the country in a very broad way. So I don't know if they're enthusiasts of having billionaires with such amount of power as Jack Ma did. And there's also this personal thing about Xi. I may be wrong, but I mean, I've read a lot about him, and it seems to me that he's a very obstinate guy. I mean, he went through a very difficult childhood, and he had his parents had problems with the Communist Party, and he basically saw his parents get beat up in I don't remember which one square was it in the Forbidden City. So I mean, this is a guy that wants to show the world and wants to show China that he is the most powerful man that ever lived in China. So he has this plan of, I mean, we have elections next year, party elections, and if I'm not wrong, Xi can go to his fourth mandate, which would be one more than Mao has. So he has this thing. He wants. I mean, it's a question of honor for him to bring Taiwan back to the country. So when I say that we know that China is going for Taiwan, we just don't know when. I mean, we can look back and see what happened in Hong Kong. I mean, we were talking a few years ago on one country, two systems, and this is not what really happened. When he got sick of it, when he got tired of people in the streets or with the mainstream media in Hong Kong talking bad things about the Chinese government, they went there and they solved the issue. So, well, Taiwan is a little bit more complicated because Taiwan has protection from other countries, especially US, Japan, and Australia, and they have the ocean between them. But I mean, even for US, I mean, it's very hard to compete with all the Chinese armada and really close to their coast. So when you look at this, and I really think that it's really hard to predict the future on what's the agenda of the Chinese government. And the second part, I mean, if I'm not wrong, you said about the regulation on financial institutions, right?
Yeah, on Ant Financial, the
yes.
Ant Group, yeah.
Yeah, so you saw that it happens not only with Ant. Ant was the most famous one, but everyone, Meituan too, and Tencent too. Everyone who started to have banking services, the Chinese regulators went on to them. I mean, what that says to me is that they don't want to lose control of their financial environment. So it's then again, I mean, we go to every time to the same place. We're talking here about control. They did a great job opening the country and making the country grow the way China did. But now I think they're afraid of this. They might lose control of it. So that's why they are kind of, reclosing a little bit. I don't know how this is going to last. I don't know how long Xi is going to last. Maybe one day he'll step down and someone more friendly is going to come. But at the end of the day, it's one of the most difficult questions of our times, I think.
Okay, thank you, Maria.
And I'm more narrowly sort of talking about their agenda regarding sort of something like financial and regarding tech. I think the public agenda of China as a government is they want innovation, right? They want these companies to invest in real innovation that will take China to this leadership. What they don't want is what they might interpret as profiteering, or giving these companies a disproportionate market power would allow them to kind of the situation of Didi being the only company in there, right? That is what they discourage, because that translate in their mind in extra profits that they don't deserve. I mean, they were there, they were given the opportunity, and also doesn't serve the agenda. They become too powerful or whatever. So I think the idea is these companies, the Baidus, the Babas of the world, are to take this position that they have today and innovate to move that, to get to that higher level of innovation that is going to allow this leadership that China really wants in technology. China wants to be the leader in AI. China wants to be the leader in this sort of true fight of the future. So all these actions that we see, antitrust, all these are expressions of like kind of slapping these companies down to say, well, we don't want this crop of companies that are just giants profiting from it. We needed to reinvest and innovate. That, I think, is the public agenda. And I don't think it's an agenda that is not valid in reality. I think it's a valid agenda for a country that can do that. So in terms of the other agenda and what is the ideology of Xi and what ideologically his view, I mean, that is a much deeper question, right? And ideologically, certainly he's motivated by ideology. This whole idea that China will look at the rest of the world eye level, no longer have to look, up to the rest of the world, is something that is new in terms of policy. Is very different than Xiaoping, very different than previous leaders. So he is transforming that, and I think that is part of this taking on sort of the America battle right on. But I think internally, I think what they expect for these technology companies, what they want these technology companies to be, is all about innovation, about leadership, not about profiteering or being sort of this abusing what they see, this excessive market share and market positions that they gained because the government allowed them to gain it, frankly, because if Facebook was there, if Google was there, Baidu wouldn't be what it is, right? So in a way, it's like, we allowed you, now you do this for us. That is sort of the more official view, way to see this.
Okay, great. Mitchell?
Yeah, I think what is an issue here is the complication of, is it truly the government wishing to follow a principle, regulatory principle, or is the government kind of mixing in more of the political views? Are the founders of these platforms, are they being kind of sidestepped because they're breaching certain regulations, or are they stepping? Is it a punishment for stepping for stepping out of line? I think those are those are some of the questions that remain, and adds to the opaqueness of how the Chinese government go about enforcing the regulation. I think that is one issue, and that raises suspicion, and that raises the conspiracy theory. But the Chinese government, if you look at that, they're not going to do things that are random. Because public perception is very important. So I think Chinese government work within the confines of law. However, whether it's righteous or not, they do have to work within the framework of the laws. That's why they will, enforce the antitrust that has come into an issue with and then using that to make sure that competition flourishes in China. Second is the cybersecurity law, which had been in place from 2017, but they don't just bring it on all once. There are rounds of implementation, and we are slowly seeing the stages of implementation of that law. The other one is the consumer privacy law, which I think we will see another round of implementation in September as well. So there are still some risks, and I think And as for competition, yes, I think the government does want more competition, but at the same time, they have to recognize that in the internet, it's in the technology area. Usually it's winner takes all almost, like, unless you find different verticals. And because you need the cash flow to continue to invest. It's not something that you just, like Alibaba, collects all these online shoppers, the GMV, and sits on their butt. They don't do that. They have to keep investing to remain competitive, to remain competitive, so that they could continue to manage the life cycle of their customers. I think, though, that's the part that I think Chinese government may not fully appreciate, and so they do want more competition. But if you look at, like, in the U.S., I mean, Uber is dominant. Lyft is there, but it's not quite there. Amazon is dominant. Google is dominant. So in the technology area, it's especially on the software and services, it is pretty much the winner take all. And you can't help it, because once you have accumulated customers, I mean, the reason why they come to those platforms is because they are providing value. So once value is appreciated, it's hard to take those customers away by giving them more value. Although if in order to give them more value, you have to give them better costs, and then that's going to be very costly. So I think those are some of the key issues that it's a balancing act. I think Maria said that in the beginning. It is a balancing act. So regulators have to understand, what's really good for the country or for the economy. Is it pure flourishing competition, or allowing these platforms to gain global competency? I think that's the key issue. And I think that there's it's a little bit more complex. I think if you look at how Ant Group really grew, and it's 2015-16. If you look at consumer loans, were not that popular until like 2015 or so. And the banks, because of their balance sheet issues, because of their limited credit risk, and because they didn't really understand, they didn't know that, they don't have like credit agencies like what we have, so they didn't know how much risk they could take on. And so banks were really risk averse. Therefore, consumer loans were almost non-existent, right? And because of that, Chinese government decided to deregulate and allow all these platforms to fintechs to come through and provide consumer loans. But once they did that, they ran into a problem of consumer loan defaults, and so in order to stop that, now they have to impose certain regulations. So I think those are some of the things that are, and it's not just China. We've seen this in Korea with Korean regulators as well, right? If you look at last 20 years, and sometimes they go hard on the companies, and they have to relax because they're actually clamping down too hard to become too restrictive. So I think it's going to be the Chinese government will also kind of, they will test the waters, and they'll, at times I think they'll pull their punches. But right now, as for Ant, I think certainly, if you think about the banks too, I mean, banks have no way of really tapping the consumer loan big growing market, because they just don't have the means to assess the riskness of the risk of the consumers receiving those loans. So I think those are some of the issues. But certainly, I think, I think it has been a big share overhang on the overall the internet platforms industries.
No, that's great. You brought a lot of great points, especially on the issue that the opaqueness that we have in China.
Can I compliment real quick?
Yeah, please.
Roberto. I think this is as Mitchell said, we have a great problem because usually our regulators, they're not ready to have these discussions. So when you see the solutions they find, they usually come with more problems than solutions. That's the result. So when you see the CEOs of the big tech companies, of the FANGs, talking to Congress, I mean, I almost felt pity for the congressmen and congresswomen. I mean, they don't know what to ask. They don't understand the technology. They don't understand how the business works. They don't understand much. That's actually the real deal. I mean, they're not industry people that would understand I mean, they probably have help. You know, they probably have people working for them with all these things. But I mean, if you look back in history, usually all these regulations, they fix a problem and they give you 10 more. That's my point. Thanks, Roberto.
No, this is good. So we just passing our mark here. So I would like to thank you very much. It was very, very rich discussion. I really appreciate you taking the time to be in our conference. And before we move on, I would like to ask each one of you if you want to just to do a 1 or 2 minute remark. If you have something. So let's do Mitchell, Maria, and Bruno.
Yeah, well, let me just close by repeating what I said, at the beginning. I do think that we are at a juncture where I think technology will just transform not just internet companies per se, but it's going to be part of just about every business that we see, and we're already seeing that, whether it's real estate or whether it's car dealerships. I mean, online shopping, and we're going to see a lot more of the technology embedded in just about every business. So I think there will be opportunities to invest in a lot of new innovative companies. At the same time, I do think that these existing technology companies, even though they are gargantuan, I do think that they still have a lot more value. Who's to say where Amazon could be? I mean, if you look at online shopping as a percentage of retail spending in the U.S. is only about 10%. China is already 22%. So I think, in fact, U.S. and other developed countries, I mean, you could say that online platforms, shopping platforms, could have even more upside. So I do think that technology overall is still a great place to invest. But you do have to be more selective. And I think you do have to really think about whether is it the software services side or the hardware side. And I agree with Maria. I do think that hardware side is more appealing because it has less entanglement with the regulation side, and also just given all the demand that's going to come through. I do think that I'll give more edge to the hardware side. Most of my career I've always been more of the software person, but I do think that we should be closely watching the hardware side.
Thank you, Mitchell. Fantastic, Maria.
Yes, I think maybe. Although my early remarks were very clear, I have a preference for hardware. I think I want to do a shout out to internet in China and to the Babas of the world. I think we all owe them a great debt, especially in emerging markets. I think they tested, they innovated these models at a scale that is unprecedented. I mean, what Ant has achieved, what a lot of these internet models in terms of the people that they touch, the models they transform, are only we have to thank them because this is a lesson for all of us. These are models that we can copy, adjust, replicate in other geographies at a level that really can only fail in comparison of what was achieved in China. So certainly now we are entangled in this situation, but I think a lot of these models, a lot of what these models are and how we can replicate them, and we have seen in Latin America and Russia and many geographies, Southeast Asia, that is really China was the origin of all this. And I think that is something that is sort of admirable. and something again to be commended. And again, a lot of these companies will stay, will survive in some way. I think at this point, my preference is not there, but I think the other models, the models that have copied the Babas of the world in other geographies, there are some excellent copycats. And in areas that are less penetrated, less regulated, where the runway is huge and big. And that is where I found the greatest opportunities at this point.
Thank you, Maria. And Bruno?
All right. First of all, let me say that it was an honor for me to participate in this panel with Maria, Mitchell, and Roberto. And for my final remarks, I'd like to say that we live in a very special moment for technology. So the pandemic, besides all the harm it did to the world, was a catalyst to the use of technology, a catalyst to the development of technology, a catalyst to the penetration of technology in society. So and technology has this weird network effect that means that every time the more people use technology, the more people want to use technology, the more they need to use technology, the more they depend on technology. So what I would say is that it's a very, very special time. I think we're going to live in a very different world in 2030, for an example. And I think if you want to invest in technology, you should look for that innovation that has this great potential of transformation that actually makes people's lives better. So that's what I would say for people that are looking to invest in technology and they don't know anything about technology. I mean, just look for things that make people's lives better, easier, more efficient. This is what the technology is going to change the world. So thank you.
Thank you again, Bruno. Thank you, Maria. Thank you, Mitchell. It was a great discussion, and I hope to see you soon